Now, here's the host of Good as Gold, Nick Grovich.
Hi, Nick Grovich. We're here live in Phoenix today. If you'd like to join the program, of course, call 602-324-1510. Love to get your thoughts, anything you want to talk about, any questions you have. I always appreciate phone calls. We had a seminar, was that last week, in Palm Springs? Thanks to everybody who showed up. We had a really good attendance, and it was interesting. We had people who are really into the coins, the rare coins, and had a lot of good questions and comments about the grading services and grading. And like any seminar that we have people who really didn't know much of anything about it and had some very basic questions. If you're one of those people who either is new to the metals markets or just thinking about getting in, you should call my office. It's 480-553-5282. We just prepared a new booklet about whether precious metals are right for you and how to buy precious metals without overspending, and making sure that you get the right types of metals, whether that be coins or bars. So if you would like a copy of that, I don't think we've got it back from the printer yet, but we should have it back very soon. So give the office a call. They'll be glad to put you on a list, and we should have that within the next week or so. So, like I said, if you're new to it or you want to just review the basics, see what's safe, what to watch out for, the best way to buy gold, silver, platinum, call the office, ask them for the new precious metals booklet. Just about didn't make it here today. We were coming down Scottsdale Road, and there was an accident at the 101 in Scottsdale. And it amazes me. Everybody has to stop and look at it. I was behind a Mustang. I hope you're not listening. And she stopped right in the middle of the intersection so she could watch the worker sweep up the glass. I about lost my mind. So we just barely made it here. Some of the driving in this state drives me crazy. Anyway, enough of that. As everybody knows, gold, silver, platinum, the metals are really down this last couple of weeks. Spot gold's down 5% in November. Silver and platinum are also at yearly lows. Platinum, I think, is at a 7-year low right now, which I think is incredible. Gold is right around $1,080, so we're back to the most recent low. It's kind of a critical area right here. If we can hold up, it might look somewhat bullish for it. We might get a little pop back up. But everybody's kind of on the edge of their seat, wondering, are we going down to $1,000, or are we going to hold in here? It looks like gold, I hate to say this, but it looks like it's waiting for more clarity on the outlook of the U.S. monetary policy from the Federal Reserve. It started its downward move in November when the jobs reports boosted expectations that the Fed would raise rates this year. And of course, we keep going round and round about this. One day everyone's convinced they're going to raise rates. The next day, people are thinking they're going to put it off till next year. I just heard one expert say he doesn't think they're going to actually raise rates till 2017, which will drive us crazy, because I can't go through this every other month wondering if they're going to raise rates. And that's the headline. Are they raising rates? Are they not raising rates? And I guarantee you what's going to happen if they raise rates. Then you're going to have the same thing. Are they going to raise rates again? Are they going to have a second rate hike? And then we'll go through the same stuff all over again. Every month we'll be going back and forth about a second rate, and then maybe even a third rate hike. I think part of this has pushed gold from 1,200 down here below 1,100. I think some of that has to do with the rate hikes. I have to believe that at this point, a lot of this is figured in the market already. The big thing is it depends how you read charts and how you look at the market. If you look at a 7-year chart, we're just still in a bear market in the metals markets. Nobody knows where the low is. Nobody knows if it's going to $1,000 or $800. We've been talking about this for at least the last 6 months about where the bottom could be. And last time it was down around 1,080. I think I mentioned to you, I didn't come out and say, hey, it's time to buy. But so those people who are just looking to start buying gold or silver or platinum, it's certainly a good point to start buying in. And I know what happens. It gets down here and, really we're kind of due for a little bounce back. and people wait, it bounces, and they wait a little longer, and it bounces, and then at $1,200, everybody jumps in. Next thing you know, here we are at $1,080. So if you've been waiting for a chance to add a little gold, silver, platinum, it's probably not a bad time. The really good thing right now is that the premiums, especially on the silver and the platinum, are back down to normal levels. So last time silver was at $14.50, you were paying between $21 to $23 for a silver eagle. Right now, I think you can probably buy them for under $18, give or take, per coin, which is a very reasonable price for silver eagles. So you could buy a brand new mint box for about $8,800. You can probably buy a 20 coin roll for about $365, maybe $365, $370 right now. So it's been a long time since you could buy a roll of silver eagles for under $400. Just a couple of weeks ago, I ran a special that I guarantee you was cheaper than anybody on the internet at $403 a roll, and here we are today at $365 a roll. So they're really a pretty good buy right now. Look, I don't know where silver and gold, platinum, I don't know where they're going next week or the week after that. I don't think anybody really does. You can go on the internet and you can find people that are still saying $5,000 an ounce. You can find people saying $750 an ounce. So you can, I guess the point is you can find somebody to back up anything you're thinking. The only thing I can tell you is you have to decide at a certain price if you're looking to get into the market or add to it. Only you can decide if it's right for you. At $1,080, gold is cheaper than it's been in a long, long time. Silver at under $15 is getting pretty cheap, and it's good, like I said, because the premiums are really down right now. So you're kind of get a double advantage right now because you're not overpaying for the physical metal as it was earlier this summer. The spot prices were way down, but the actual cost of buying the physical metal was very, very high. So in essence, this is a lot cheaper this time around than it was last time. You're saving several dollars an ounce on silver. On platinum, you're probably saving $50 an ounce, even though platinum's down here below $900 an ounce. It's really interesting with platinum because it's so cheap. We're down to about $880 an ounce on platinum, $879 I think we are right now. And like I said, we're at a 7-year low. It's $200 cheaper than gold, which I think is incredible. If you look at the typical ratio of platinum to gold, platinum should be right around $1,500 with gold at $1,080 an ounce. So to me, the platinum metal group is very, very underpriced. I mean, palladium is down around $565 right now. It was just a few weeks ago, it was up to $720. Even rhodium, which we've talked about rhodium before, is down around $700. So, what you have to realize about these platinum group metals is they're very, very scarce metals. And right now, you're just seeing a reaction to the commodities market in general. You see oil down around $41 a barrel. So the commodities markets themselves are down simply because Europe's in financial trouble. China isn't growing as fast as everyone expected. So the demand for industrialized products is down, and that's hurting anything that's considered a commodity right now. Looks like we're getting ready for a break here. When we get back, I'll talk a little bit more about the metals markets, and I'm going to talk a little bit more about ratios and some of the better things you can look at right now.
Once again, here's Nick Grovich.
Nick Grovich, I'm back with you. We're talking a little bit about the metals market. It's really hard when metals are down as they have been the past couple of weeks. People have a tough time getting excited when the prices are dropping. And of course, I guess it's human nature. When prices are going up, everybody gets excited. They want to jump in. They can't wait to see what's happening. And when prices drop, everybody, I don't know if they get depressed or they don't know what's going on, but people get very, I don't know the word for it, but they sit on the sidelines. So, right now I'm really excited about where especially silver and platinum are. I mean, silver under $15 an ounce is really getting cheap. Platinum under $900 to me is unbelievable. Carl's sitting here. I'm not sure I can get him on the line here.
Turned on? No, not yet.
So, Carl, tell everybody what you were telling me during the break.
Oh, well, I had a client yesterday came in and we were talking about availability on silver. He was well aware of the trouble we had finding silver the last month or so, and it finally opened back up. And then we started talking about platinum, and platinum, we can find it. Sometimes it's live or readily available. Sometimes it's not. Sometimes it's Maple Leaf. Sometimes it's Nobles. It never seems to be all of it at one time that's available. And the best way I could describe it to him was that when the industrial users' needs are met, okay, that's what primarily drives these metals, or the industrial users. That's why we're not seeing silver at $100 an ounce. Somewhere, somehow, the industrial users' needs are being met. Yes, they're selling millions of ounces of silver. Platinum, same type of deal. Why is platinum hard to find? Why isn't the price a lot higher than it is today? Well, that's because we're dealing in the physical bullion version, bullion platinum. That platinum never sees the industrial, very rarely sees industrial applications. That's just a small part of the platinum output every year. So there really isn't a big enough chunk of it being sold to really drive the market to investors. The bigger chunk is when the industrial users end up buying it.
That's right. So right now, the industrial users are buying what they need. There's no shortage per se. But what concerns me is the minute the economy picks up a little bit, I don't know where they're going to find the expanded supply of platinum or even silver to a lesser degree. Silver, even if silver moves to $20, you don't see a lot of silver come on the market. What happens when silver starts getting pricey up into the $30, $40 range? Then you get people bringing in their silver coins and silver flatware and all that type of thing, and that's why you see those huge dips in silver. You'll see it go to $20 and drop half overnight, or $45, and next thing you know, it's $20 an ounce. That's because there's just so much silver above ground. But at $15, $18, $20, people don't get that excited. I mean, right now, an average set of flatware probably is about $1,000. That's all it's worth. I remember paying people $3,000 and $4,000 for a set of silverware. $3,000 or $4,000, it starts getting excited. At $1,000, people figure they might as well eat with it.
Right.
But that's what drives, and people don't realize that's what drives a lot of the price of silver. And Carl, I think you were exactly right about platinum. The industrial users do have exactly what they need right now. But there's nothing left over.
There's nothing left.
There's nothing left over. What's crazy is if you wanted to buy 1,000 ounces of gold, I could buy that in less than a minute. It'd take me less than a minute to make a phone call, lock in the price, and have 1,000 gold eagles or bars or whatever, however you want to take delivery. I could have 1,000 ounces here in a matter of a couple days. 1,000 ounces of platinum, I don't think I could take an order for it. I don't know where I'd get 1,000 ounces. I've been buying, the last couple of weeks, I've had some big orders for platinum. And, when I call some of the major suppliers, for instance, last week I called to buy some platinum maple leafs, and I could only find 64 coins. I mean, when you're talking about bullion, that's insane that you can only buy 64 ounces. And then I had to buy platinum nobles. That's another 1 ounce coin from the Isle of Man. And these are all just bullion items. They're just based on the price of the platinum. So we don't really care if it's a noble or a maple leaf or an Australian platypus. I mean, they all have funny names and funny designs on them, but it's just 1 ounce of platinum. But even when I have to buy 100 ounces of platinum, it seems like I can't buy 100 of one item. I've got to buy, in this case, 64 of one, and then I had to buy 70 nobles, and then sometimes we have to buy the bars. So it just amazes me that it can keep dropping in price, and you can't even find the darn stuff if you want to take physical delivery of it. Like you said, though, the industrial users aren't buying the same product we're buying. Only a small part of the platinum that's mined goes to investors. I think it's less than 10% of what's produced goes to investors. So there's just not a big overhang of it. And, when industrial use picks up, I really, really believe that all the platinum group metals are going to be, when they move, I think it's going to be a really big move, because you could double the price of platinum and you're not going to increase production that much. I don't think it's possible. And the mines in South Africa, I've said this probably 100 times now, but 3 mines in South Africa account for 80% of the platinum mined every year in the entire world. So you have 3 mines responsible for 80% of all the platinum mined. If I was a car manufacturer, that'd scare the daylights out of me, depending on 3 mines in South Africa. And these mines have been around for decades and decades. Some of the shafts collapsed. They're very dangerous. The mine workers last year had their wages doubled just because nobody wants to go down in the mines. I guess there's a price that you're willing to take the danger. And now they're having a water shortage, and apparently it takes a lot of water to manufacture platinum to produce it. And that's, it just seems like it's one thing after another with the platinum mines. We had a 5-month strike last year. We had mine collapses. We had all types of things. Now we have a drought, and so they're worried about platinum production from the drought. Where gold is the opposite. They're usually pumping water out of gold mines. So in platinum mines, they need to pump water in. So it just seems like it's one thing after another. And the minute if Europe ever turns around or China picks up a little bit, I just am. I'm not going to be surprised at a big move in platinum. I could see it going from $800 to a couple $1,000s very quickly once demand picks up on it. But as long as investors are really bullish on the dollar, which is what's going on, gold and silver are going to just be stuck in these lower trading ranges. I guess the thing you have to ask yourself is, do you really believe the dollar stays strong for any length of time? I mean, do you really believe that the dollar has dropped in value consistently since the 1930s? And if you look, the gold standard was ended officially in 1971. The foreign governments couldn't get gold out of the United States, and up until 1971, if you were a foreigner, you could still trade your dollars in for gold. And once that stopped, the value of the dollar really dropped. I can't show you a chart over the phone, but in that booklet I talked about, we do have a chart that shows that the value of the dollar has gone from $1 back in 1933 down to about a nickel today. So unless you think that's going to suddenly turn around and the value of your dollar is going to start going up, gold's really, I think it's a good long-term hold.
Safe haven.
Yeah, it's a good safe haven. But like I said, it's everybody's got a little different need for gold, or some people don't have any need whatsoever for it. So when the prices are down like this, it's a really, really good time to take a look at what you're holding if you're already involved. Make sure you have you have gold, silver, platinum, whatever it is you're looking at. Make sure you have something that really serves your needs. Make sure that it's really something you want to be in. I mean, if it is, this is a good time to start buying it. If it's not, I don't know if it's a great time to sell it or not.
It's a good time to trade if you have
Morgan
dollars.
It's a good time. We're coming up on a break, and after the break, I'm going to tell you a couple other things you might want to look at. In these down markets, in these soft markets that we've had, there are a lot of opportunities, maybe not to make money, but to increase the amount of bullion that you have. And it has to do with these premiums and ratios that we're talking about. And I've had lots of clients who have taken what they have and traded it for other forms of silver or other forms of platinum or gold even. We've even had people in gold that have managed to double the amount of gold they have. But if you watch the premiums, that's the price or the value of a coin over and above its intrinsic value. There's a lot of things that happen in both bull markets and bear markets. And unfortunately, a lot of times when the price is down, people don't pay attention to anything. They just know that gold's down or silver's down, and they kind of tune out. And a lot of times in these types of markets, there's really a lot of opportunities. Even if you're not in it to buy and sell and trade and make money, there's a lot of opportunities that can really benefit you. After this break, we'll talk about a couple of those.
Once again, here's Nick Grovich.
Grovich, I'm back with you. We've been talking a little bit about the precious metals markets. The one thing I say this all the time, but I'm going to say it again because some of the stuff I've gotten in the mail. I'm on everybody's mailing list too. Some of that's by design, so I can see what people are saying and doing. But dealers are great at using scare tactics. Now I know a lot of my clients are really worried about the future of this country. They're worried about the future of the dollar. They're worried about the debt. There's a lot of good reasons to put some gold aside, some gold, silver, any type of precious metals, and just put it away for the bad times, for the worst case scenarios. And I just recently saw, I got a little booklet, and Ron Paul, ex-Congressman Ron Paul's on it. And I find it really ironic. His son's running for president, and Ron Paul, in this video, he's standing in front of the White House, and the White House is burning to the ground. And he's talking about how the United States is going to collapse, and nobody can save us, and nobody can change it. And in the meantime, his son's running for president, saying just exactly the opposite thing, that he can get in and save us. Well, I know they have a big name with Ron Paul, but it's pure scare tactics. Now, is a lot of the stuff they say true? I'm sure it is. I haven't gone through it with a fine-tooth comb, but these are. I'm sure if you go through the whole video in the book, there's a lot of good information. There's a lot of good reasons to buy gold, but what you have to be really careful of is a lot of times they're going to use that. They're going to scare you into buying, and on top of it, they're probably not even going to sell you a gold bullion or silver bullion. They're going to sell you a variety of overpriced numismatic coins or semi-collectible coins or certified bullion coins, that is, coins that have been graded by NGC or PCGS or worse yet, some of the other grading services. And I don't know. I have yet to see anybody who's bought when they were scared into buying that has bought the right type of thing. So you have to be really careful. And again, I'm going to plug our new booklet. I can't even think of what the name of it is. Or Precious Metals, Right for You. That's not the name of it. But should you own precious metals? Should you protect your wealth with precious metals? And if you're looking at buying, call the office, get a copy. It's 480-553-5282, and it's just the basics. But follow the basics; it'll keep you out of trouble. A few other things I wanted to talk about in this market. There are a lot of opportunities right now in the market. Whether you already own coins and bullion or not. Years ago, I used to beg people who owned St. Gaudens, especially MS63 or MS64 St. Gaudens, and I used to beg them to trade their St. Gaudens in for gold eagles or gold maple leafs, just any gold bullion coin. And the reason is, if you go back 20 to 30 years, an MS63 St. Gauden, that's a mid-range uncirculated coin, they used to go for about double the price of gold. So if gold was $400 and MS63 St. Gauden was going for $750 to $850. And it's a very, very common coin. I know a lot of dealers still promote them and sell them. They sell the $20 Liberties and the $20 St. Gauden. A lot of dealers will try and scare you with the gold confiscation argument. I think I'm not going to go in that in detail. Maybe one show we should just go through the whole confiscation argument. I've got a booklet on confiscation too, so if that's a concern of yours, call the office. We'll send you a copy of that. But you need to understand that the St. Gauden is a very common coin. When I say St. Gauden, that's the $20 gold piece from 1907 to 1933. They made those. And the $20 Liberty is the $20 coin they minted before that. Now, yes, they're older coins, and if you've never held an old U.S. coin, they're very... St. Gauden's a really pretty coin. They're very historic. They're fun to hold. It's, from that standpoint, it's a great coin. But you end up paying this huge premium over what the metal's worth. And they're very, very common. I forget how many million. I think there's over 2 million of them graded by PCGS and NGC. And I can tell you there's many times that out there in the marketplace available. They made these coins by the tens of millions. So it's far from a rare coin. And I can tell you they didn't melt all that many down in 1933. What happened is most of them got shipped off to Europe. You had, even in this country, people understood that we were going off of the gold standard because gold was actually more valuable elsewhere than what the U.S. government said it was worth. In a lot of states in the West, $20 gold coin was worth more than $20. A $20 gold coin had more than $20 worth of gold in it, so it was very, very hard to even get some of these gold coins by the time they confiscated gold, or called in the gold, I should say. But a lot of it went overseas for that reason. You know, if you could take a $20 gold piece and get $22 for it, that's a nice 10% profit. That's, I mean, percentage-wise, that was pretty good. So these St. Gaudens and Liberties were being sold as a rare coin when indeed they were not rare at all. And you know, when they were first marketed, mostly in the 80s, some a little bit in the 70s, but mostly the 80s, and then up to the mid 90s. I mean, they're still marketed today. They had a big premium on them, and so a lot of times we would be able to take people out of a St. Gauden and put them into 2 ounces of gold, which was a great way to increase the amount of gold they had. The reason that I was so adamant about that, again, is because they are a very common coin. And what people don't understand about the U.S. coin market is a lot of the market in these pre-1933 gold coins, a lot of this is just a created market. The market's been created by dealers. And, you know, the way this happened was back in the 50s, 60s, 70s, 80s, even today. Dealers would have connections over in Switzerland, let's say, for example, and we'd go over there and buy these St. Gaudens by the bag. Some of them were still in the original bags that they were shipped over there in back in the 1930s. I was there, and we had bags of coins that were still in the bags from 1910, 1913, 1912, 1916. So these were just original bags that just never got distributed by the mint, and they ended up over there. Well, we'd bring those back. And of course, where the money was to be made was by pulling out the coins that had the biggest premiums. So we'd pull out the highest quality coins, and on those coins we could make a real good profit. But then we were stuck with thousands of coins that were just average quality, which is really what an MS-63 is, or an MS-60, and we had no way to market those coins. We can't take them back to Europe and say, hey, you could have these back. We had to do something to sell them. So what happened is the people importing these coins would get the big dealers of the time, which were back then it was Investment Rarities and Blanchard down in New Orleans. Those were the two big dealers. And also North American Coin here in Phoenix. They're no longer around. But we would get the brokers, and some of these dealers had 300-400 brokers, and get those brokers to sell these coins and create a market. So the brokers would take these coins and they would talk them up and sometimes make up stories, sometimes just maybe talk a little nicer about the coins than they deserved. And they'd sell them to their investor clients, or they'd sell them to people who wanted gold. This still goes on today. So that was how we basically got rid of these coins. We had to create a market for them, and that was done by using the big telemarketers. So these big telemarketers got rid of hundreds of thousands, probably millions and millions of these pre-1933 coins. Now, included in this, I'm talking about St. Gaudens, the $20 Liberties, $10 Liberties, $5 Liberties, $10 Indians, $5 Indians, all these pre-1933 coins that everyone's touting as rare coins. Well, you know, as more and more of these coins are sold into the marketplace, it waters down, obviously, the value of the rest of the coins. You have 2 million coins out there. How rare are they? They're not very rare. So it only stands to reason that as time goes by, the premium, that is the amount they're worth over and above the intrinsic gold value, would drop. And that's exactly what's been happening the last 20 years. I know jewelry grade, which means worn out or polished St. Gaudens, they're worth about 1% to 2% over what the gold is worth in them. So that's really very, very little premium. So the people who traded out of these and got 2 ounces of gold for every St. Gauden, they did very well, because if they held on to those coins, they'd now be sitting on less than an ounce of gold. So regardless of the price, they used that premium to increase the amount of gold that they had. And even today, a lot of dealers are selling the St. Gaudens and 20 Liberties and talking about how low the premium is, and you should buy it today because the premium is going to come back. The thing you have to realize is this is not a cycle. this is a major market trend that has changed. Anybody who bought these pre-1933 gold coins as the gold market went up from 1999 to 2011 saw that they made maybe half as much money as if they would have just bought gold bullion coins like eagles or maple leafs or bars. So these earlier dated coins, they didn't keep up with the gold market. They lost their premium. They lost their value. Their gold value went up. Their collector value went down to almost nothing. So they're sitting on coins that, as the gold market went up, like I said, they may have made half as much, if even that, as what the gold market did. And in the meantime, they took the risk. They bought an illiquid coin. They have something that's very, very hard to sell when the market's hot. It's really hard to get somebody to buy your St. Gaudens when gold's at $1,900 an ounce. And, of course, you can't do much about that today unless you have higher grade coins that still have premiums. But these are the types of things that we try and watch out for, and these are the type of things that you need to know about. Now, in the silver market, right now, there's the same type of opportunity in silver dollars. I know a lot of dealers have really promoted the Morgan dollars and peace dollars, and everything from circulated coins to MS-65s, and selling them the same way they sold the St. Gaudens. They're talking about confiscation, which is insane because the government's never confiscated silver. Looks like we're coming up on a break. So we're going to stop after this break. I'm going to talk a little bit about the Morgan dollars.
Once again, here's Nick Grovich.
Hi, welcome back. Carl Ladas here, sitting in with Nick Grovich. Wanted just to remind everybody out there that we have Financial Fest this Saturday at the JW Marriott. It's from 8 till 4 o'clock. JW Marriott's off of the 101 in Tatum. It's in the Desert Ridge, North Valley. Nick will actually be speaking around 1 o'clock. Feel free to go in there and see what information you can pull out of him. Ask him questions. He loves it when people do that.
Thanks, Carl. We'll stop by our booth. We'll have all kinds of books. Our new booklet, Protect Your Wealth with Precious Metals, may not be ready tomorrow, but if you give me your name, I'll make sure we send you one in the next week when they finally are done. But, stop by the booth. We've got lots of materials. We'd love to talk to you. If you do own coins, bring a copy of a list and leave it with me, or if it's a short list, I can look at it while we're there. But bring a list. I'll be glad to review it with you, kind of go over the values, give you any suggestions. If you have questions or you already bought coins elsewhere and you want to know how you're doing, I'm glad to do that. About the only thing I can't do while I'm there is tell you where gold's going to be on Monday. But short of that, I'm glad to answer questions. Every now and then at the Palm Springs seminar, we did have somebody who really had some grievances with one of the grading services, so he kind of called me to task on a couple of things. But I think I was able to answer all of his questions, tell him how to solve his problem, and so even if there's something you don't agree on or you have a problem, I'll do my best to help you out if that's the case. But don't come asking me, is this dealer good? Is that dealer good? Show me your list of coins, and you'll know if your dealer's good or not once I'm done with your list. But I'd love to meet you. We'll be there all day. Carl won't be there. I'll be there. Don Gaz will be there. Jen will be there. So come by the booth. We were talking a little bit about Morgan dollars. The reason I wanted to talk about the silver dollars, we have hundreds of phone calls a week from people who are investing in coins and metals and just have questions. And I start getting the same questions over and over again, and that kind of tells me what other dealers are doing. And I know for quite some time now, a lot of dealers have been recommending the circulated Morgan and Peace dollars. And I hate to make it sound like I'm always saying, the other guys are doing this or doing that for questionable reasons. But unfortunately, it's true a lot of times. The Morgan dollars and Peace dollars have about 3/4 of an ounce of silver in them. Most dealers are selling those anywhere from $28 to $35. Now, I'm just talking about a regular old used worn coin. And they have about $11 worth of silver in them. So you're paying, on average, people are paying almost $30 for a coin that has $11 worth of silver in it. And again, they're not rare. The government made hundreds of millions of these coins. I think the number is somewhere close to 900 million of them. That doesn't include the peace dollars. So they're very plentiful. They're out there. They're not rare. They're selling them in circulated condition. That means these are coins that were used in commerce. They're not brand new shiny coins. And I've heard some people say that, well, these are safe from confiscation. The government's never confiscated silver, and if you think of just the pure logistics of it, I don't know how they ever could confiscate silver. For one, especially, even at $100 an ounce, it's very, very inexpensive and it's very bulky. So even if silver is $100 an ounce, I don't know where the government would ever store all that silver. On past programs, I talked about the problems they had at the Philadelphia Mint around the turn of the last century. Back then they had silver certificates, the paper silver certificates, and they actually kept one silver dollar in reserve for every silver certificate that they printed. And there's great articles in the Numismatist magazine. That's a publication by the American Numismatic Association. Really interesting articles about how they had such a problem storing this ungodly amount of silver dollars. And I don't remember how many hundred millions of dollars they had stored, but that's back when the government was honest. If they printed money, they had something backing it. But they had all these coins stored and stored and stored. So they actually had to build a new mint and put the silver dollars in the basement and build the mint around them because they couldn't figure out how to store the darn things. And the government was busy getting rid of these things right up until the 1960s. You could still go to Las Vegas. Las Vegas was the last place that used the silver dollars. You could still go to Vegas and get them out of the slot machines in the 60s. Even in the 70s, the government was selling the Carson City dollars. So I'm getting a little off track. But what I'm saying is they're very plentiful. And the government... I can't imagine a scenario of them confiscating silver. I think it would be nearly impossible logistically. So the whole argument of buying Morgan dollars because your silver is going to be confiscated is ludicrous. The second thing that I really think you have to look at on these is the spread, the difference between the buy and sell. The wholesale cost of most of these coins is roughly $20 a coin. Now, some are worth a little more, some a little less, but $20 a coin is about what they go for. So here's where the trade comes in that can benefit you. If you've got circulated silver dollars, and I'm talking about Morgans or peace dollars, and let's just say they're worth about $20 a coin, you can darn near double the amount of silver that you have simply by trading your Morgan or peace dollars in for silver 1 ounce rounds or bars or something like that. So you're going to get $20 for $11 worth of silver. I mean, that's a good deal. To me, if somebody's willing to pay you $20 for $11 worth of silver, that's a good deal. Yeah. And
the other thing is, these are the highest premiums we've seen on those in 3-4 years.
Yeah, it's a very, very high premium. And the flip side of this is, people expect that, okay, well, they're holding silver dollars because they think silver is going up. Well, you're already getting almost double the price of the silver right now. So if silver doubles, you don't necessarily make any money. When silver was up around $45 to $50, this premium has a tendency of disappearing because we get so much silver that comes in to go to the smelters that the smelters basically get months behind. And then the premiums disappear because who wants to pay a premium on coins that are going to sit there for 3 months before your silver is smelted, if they do indeed smelt it. And so when silver was close to $50 an ounce, you were lucky to get $36 or $37 for your silver dollars. So figure this out. Let's say silver, well, it's under $15, but at $15 and it goes to $45 an ounce, that's 3 times your money. And a silver dollar, if you have a silver dollar that's worth $20 and it goes to $36, you're not even doubling your money. And that's not counting dealer commissions or spreads or anything like that.
Pure premium.
So the silver dollars are just a really bad deal. Even if you're right about silver and it triples in value, you're going to make a very small profit. You might make 50 to 70% if you're really lucky. In the meantime, right now, you could trade those dollars, get twice as much silver. If you took every dollar and turned it into 2 ounces of silver, and silver goes to $45, you just made 6 times your money. that's a much better deal, and it's one of the ways that you can use this stagnant to this bear market in the metals to your advantage. So these are the types of things that at American Federal we try to watch and keep you aware of. The bonus is every now and then you get a better date silver dollar. I just had a local gentleman come in, and we went through his silver dollars, and I found a rare date, and I paid him $1,000 for one coin. So that was another nice bonus because, had he taken it elsewhere, who knows if they would ever looked at the dates and told him there was $1,000 coin in it. He might have sold it for $20. Who knows? So if you have silver dollars, this is just one example of the type of thing that you could do right now that could greatly impact your portfolio when silver does finally pick up. And, if you'd like to get more of these suggestions on a regular basis, you should call my office, 480-553-5282. Go online, AmericanFederal.com. Ask to be put on our preferred client list. We send out emails every once in a while as these different opportunities come up. It's something we do for our clients to keep them aware of what's going on in the market and hopefully show them how they can benefit even in a down market like this.